Yeah, people hopefully are going to join any minute now. I just resent the email with the link too to make it easy for people. Hi, good morning. Welcome to the Vashon Chamber of Commerce, Chamber Chat number 10. I'm talking about the Payroll Protection Plan Loan Forgiveness. Just to understand that is what the goal of today is. Lots of details. If we're just going to give it a few minutes for people to start, and then I will introduce Heather Russell of US Bank to walk us through what she has learned and what she knows that we have to consider as we're looking at our the payroll protection loans. There certainly has been a lot of changes that have been occurring, lots of FAQs coming out from the Treasury Department, lots of little things that you have to consider as you're managing the use of and the tracking of this loan. So let's just give it a couple more minutes if everybody will just hang tight. I'm Cheryl Lubert. I'm the president of the Chamber of Commerce Board of Directors. I'm happy to host these on a regular basis to help our business community have the information they need to navigate this crazy situation that we're in. So we've got about 14 people, not 15, got another person added. Good morning, everybody. We're just gonna hang tight for a minute before we get started to make sure we have everybody have a chance to log on and join us. How are you doing this morning, Heather? Nice to see you.
Hi, just great. Wonderful to see you. Happy to be here.
I'm glad you're here. It's nice to see your face on Zoom.
Absolutely.
And I know US Bank has been open by appointments too, so that has been, I'm probably keeping you pretty busy.
Oh, definitely. Lots of Zoom calls, lots of, even in person, you know, we've got our masks here and our gloves and keeping everyone protected.
Good. That's great. That's the way we need to do it. All right. Well, I think we do have a quorum. So why don't we go ahead and get started this morning? We are recording this webinar so that if you want to go back and check something out later, you'll be able to go back to listen to it. It will be on vashonchamber.com for your information. So today I have the pleasure of having Heather Russell back. She talked to us about the payroll protection plan when it first came out, a program when it first came out. And now here we are having her talk to us about how to navigate it. So now that some people have been able to access those loans. So Heather, why don't you take it away? Just let me know when you want me to advance the slide.
Wonderful. Thank you, Cheryl. So for those of you who don't know me, I'm Heather Russell. I'm the branch manager at the US Bank here on Vashon. And I'm also the treasurer of the Chamber of Commerce. And that's how Cheryl and I work together quite closely with the Chamber of Commerce and Vashon Be Prepared. So thank you so much to Vashon Be Prepared for their partnership with us and all the work we're doing here to help the community. So I just want to say one little thing here, which is that all of this information that I'm sharing, I have not received internally from US Bank. So this is not from a bank perspective. This is really from the Treasury website, from the FAQs that are coming out, and just the research that I've done individually as a person. And so I'm bringing this to you not as a US Bank representative, but really as just someone who I'm trying to offer the gift of a little bit of knowledge that I've compiled. So first, I want to go over here with you the covered expenses for the Paycheck Protection Program. And you might think that this is very obvious because of the name of this loan, Paycheck Protection. But I think some people are not 100% clear on this. And so the underlying intention of this program is to really alleviate the stress on states' unemployment coffers. So as you can imagine, with millions running, being laid off and running to unemployment, there has been a, huge run on those funds there. And so the PPP is really here designed and meant to keep people off of unemployment and on people's payroll during this difficult time. So for some industries, that might mean that you are just paying people to stay home and do absolutely nothing. And I know that that might seem really strange, but that is what the intention is. And if you are thinking about using the funds in ways that are other than payroll, although you can use 25%, no more than 25% on other expenses, I really, really discourage you from doing that because that is, you'll find in a lot of the language that's really considered a fraudulent use of this, this source of funds. So if we could forward to the next slide. So as I was saying, just kind of err on the side of caution when it comes to the covered expenses. You might have gotten a large lump sum of money and you do not need to use that all. It's not like a game where you're trying to figure out how to use it all. It's really like, if it's a covered expense, then use it for that. And if you have a balance remaining at the end, you can just pay it back. So at least 75% of the loan must be spent towards payroll costs. And payroll costs, just to kind of go into the nitty-gritty of what that means exactly, is gross pay, and it does not cover any of your 1099 employees. So that's like an independent contractor because they can actually apply for their own PPP. So it's gross pay for your W-2 employees, or if you're self-employed through your Schedule C. It also is employer paid health care or employer matched retirement. Okay, so there's a little bit more detail on that if you want to drill down to it, but I think people have kind of generally understood this part of it, that it's really for payroll costs. At least 75% of your loan must be spent on that. No more than 25% of the loan can be spent towards the other covered costs. So we're talking about your rent or mortgage, your business loan interest. So if you have, an equipment loan out there or a credit card that you're paying interest on, you can pay that with this 25%. And then your utilities. Now, I've had some questions where people are like, well, is a utility like, my fancy IT package? No, I would really err on the side of caution. You're looking at, your electricity, your water, your garbage, things that are just very obvious utility costs. Okay, if we could go on to the next slide. All right, so as part of the payroll aspect of this, I want to kind of give a little bit more clarity around maintaining the same level of staffing that you had you have two different time periods that you can choose from here. And they're clear in the verbiage that it's really at your election which of these two time periods you decide to use. The first here being January 1st of 2020 through February 29th of 2020. The second one being February 15th of 2019 to June 30th of 2019. So as you can see, it's either the first couple of months of this year or last year at this same time. So it's up to you to decide which of these two time frames make the most sense to compare your payroll to. And what you're going to be doing with that is basically looking at your level of staffing during these timeframes and figuring out what your total FTE is. So I did a couple of examples here where I gave you the total hours in each of those time periods. So January to February 29th, 2020, that's 344 working hours. That's 43 days times 8 hours a day. So that's considering 8 hours a day, 40 hours a week, Monday through Friday. Okay, so if you have a total hours of 344, then you're gonna look at how many total hours. So, maybe you have a handful of employees. You look at your timesheets or your payroll records. You should have different reports and whatnot that you can look at to see how many hours were actually worked during that time frame. So I gave a very obvious example of one full-time employee So they would have worked 344 hours because they're full-time. So you can see the math there is you take the 344 and divide it by the 344, and that equals 1. So you have 1 full-time equivalent person. Then I gave you a little bit more of a complicated one where you have a 15-hour employee, maybe you've got a 20, then you've got another 30-hour employee. And let's say that they worked a total hours of 599 during that time frame. So then you would divide that by the total hours available, and then you would have 1.74 FTE, or full-time equivalent. So what that means is during your 8-week period that after you get the PPP, you need to make sure that you're maintaining that same level of FTE. So if you calculate it out and it's 1.74 during that time frame, then you need to maintain 1.74, or you need to use that 75% of your cost proportionally to how much, how many employees you keep. So if you normally have 1 full-time employee, you have to lay them off, then you get the PPP, yay, I've got the PPP, I can rehire you, but they can only work 20 hours a week. So you just need to make sure that you're only using half of that because they're only working half of what they used to, okay? So I also did the same sort of math over here on your second option, which is the February 15th through June 30th, 2019. And as you can see, the same time frame, but the hours are different. So it's a longer time frame. So you have a lot more hours during that time. And I gave a couple of examples of how you would calculate that FTE. So you'll have to look at your real numbers and decide which one makes the most sense to you to utilize for your PPP. Okay, let's move on to the next one. This one's very data heavy. Okay, so let's talk a little bit now about forgiveness. We can move on to the next slide, please. Perfect. So in terms of forgiveness, I want you to think about this in terms of 3 pieces of documentation that you need. And you can start collecting all of this right now in terms of the proof of obligation to pay. These are all things that you probably have, most all of this, already starting now, and then you can just move forward and start keeping track of these things. So your first thing is your payroll reports. So whether that be, payroll reports through your accounting software, or your time cards that you have your employees clock in and clock out, or whatever method you use, start accumulating those. Your utility bills from January all the way through June, because they are going to want to understand that you've had these utilities in place as of February 15th of 2020. So obviously they want to know that this is a utility that you didn't just sign up for, yay, I've got PPP money. That doesn't mean that you're going to go sign up for new services. It's something that's established as of the 15th of February. For your rent, go grab your lease agreement. So you have that obligation to pay, proof that you are obliged to pay for your rent and how much that monthly cost is. And then for the interest on your loans, you can just go pull your statements showing the interest that's charged. And again, the time frame that I would just start stockpiling is from January to June, because why not just have it all there and ready for you. The second piece of documentation, if we could move on to the next slide, is the proof that you actually paid those obligations. So first we have the obligation that you said, okay, I'm proving that I was supposed to pay this. And then you want to say, and I actually paid it. So check stubs for your payroll, showing that you actually cut checks, you have your check numbers there. If you have receipts, confirmation of payment. Sometimes people have digital receipts. There's different, ways that you can keep track of that. Or if you did pay anything, more manually, keeping your paper receipts, just kind of having a file there with all of the receipts of what you paid, if you used your debit card or credit card, so on and so forth. And then the third piece of documentation, if we could move to the next slide, is the one that kind of ties the two together. So your bank statements are going to be your kind of corroborating piece of evidence here that you're saying, okay, so I had an obligation to pay, and here are my check stubs that showed that I paid it, or my credit card receipts, so on and so forth. And that should match what you have on your bank statements. So those dollar amounts should be duplicated there, and that kind of serves as a triple check on your numbers there. So yeah, if we could move on to the next slide. I wanted to throw in just one slide here for self-employed. I know that we have quite a few self-employed people on the island, and this is actually really simple. I was sort of surprised by how simple it was. It's essentially, you are going to want to get your 2019 taxes done. I know that that was extended, but I would push to get those done, because what they are going to require to look at is what your annual income was on your 2019 Schedule C taxes. So how they are looking at the payroll forgiveness is that they're going to look at your Schedule C. They'll divide that number by 52 weeks, which will give them a weekly income. And then they're going to times that by 8 weeks. And then this amount is going to be forgiven. No ifs, ands, or buts. They don't even really care about showing it on your statements or showing it going from your business account to your personal account. It's actually less rigorous than the other methods. It's really just, do that math, and that amount will be forgiven based on your Schedule C. And of course, follow the same guidelines of the 3 pieces of documentation when it comes to the other expenses: your rent, your utilities, and your interest. Okay, and if we could move on to the next slide. Okay, what happens if your loan is not forgiven? Okay. I would really, again, back to my original message, don't feel like you have to spend all this money. Save any money that you don't spend. Just actually use it for the costs that come up during that 8-week time frame. And then you'll have anything that doesn't make sense in terms of those particular covered expenses to pay back the money immediately. If you do have an additional balance, I mean, we all make mistakes. Maybe there is a calculation error and you find, okay, well, there is, a couple thousand here that are not going to be forgiven. Then it does turn into a loan. It's a 1% loan over 2 years, which is a rather short term. So those payments are going to be pretty high. I gave you an example here. If you had $10,000 that was not forgiven, that does calculate out to being $421.02 a month. So, that you don't really want it to turn into a loan, but it's not the end of the world if it does. And your payments are going to be deferred for 6 months. So you could look at different options to kind of refinance and maybe get a longer term at that point. And any questions from anybody?
Well, we have lots of questions for you, Heather.
Okay.
So I'm going to start off with first question from Amy. If you've laid off some employees, and you did touch on this a little bit, if you've laid off some employees, how is forgiveness calculated?
Okay, so if you've laid off some employees, again, you need to look at one of those 2 timeframes that I outlined. So the first couple of months of the year, or last year at the same time. And either you want to rehire them, or if you choose that you don't want to rehire them, then you need to use the money proportionally to how many people you have. So you can't go and give people raises, for example. So let's say you had 2 employees and you had to lay off 1. Then you're just going to want to use 50%. And I'm assuming that these are both full-time employees. You're just going to want to use 50% because you applied for the PPP, assuming that you were going to have 2 employees, right? So they are going to say, wait, you don't have 2 employees anymore. You only have 1. And so you need to use 50% of the allocated funds.
But if you were to hire both of them back, then that loan portion would be forgiven. And if you don't hire either of them back, then you would not have that portion forgiven. Is that the kind of way to think about it, Heather?
That is a great way to think about it.
Okay. Hopefully that answers your question, Amy. And then we have a question from Elizabeth. Does insurance qualify as part of the 25% that's not forgivable?
Insurance. That is a good question. Let me do a little research and I'll circle back on that one.
Okay, great. So Elizabeth, we'll get back to you on that, post it up on the Chamber website. And then we have another question here. If you're self-employed, for self-employed people who purchase an individual health plan through the marketplace, does this count as employee paid medical?
It does not, unfortunately. Yeah, when you're self-employed, that is looked at as your own cost.
Okay, great. I have another question that's come in, and this one is from Joanne. At the time we applied, there was no FTE requirement. They specifically asked for the number of employees. So I don't think I should use FTE in the forgiveness calculation. What's your perspective on that, Heather?
Okay, so when you originally applied, you should have been providing a number to the bank or to the SBA. I don't know how you got your loan exactly. That would have been all of your payroll costs. Implicit in that is your FTE. So, you know, if you had, say, I don't know, $100,000 payroll costs in 2019, let's say you were looking at your like 940 or 941s or something like that, then there's going to be, you know, there may be fluctuations actually over that time period of how many people you have, but really they're looking at the FTE from those 2 time frames and essentially looking at how many people you had during those 2 time frames. So it's up to you to look at which one of those 2 makes the most sense. My understanding is that that is definitely going to be a component of the forgiveness process. So I wouldn't ignore it, I guess. So take that, you know, take that information and decide how it maybe applies to your specific situation. And if you want to consult with maybe a CPA or something like that, I'd recommend that.
Yeah, absolutely. And Heather, my experience working with my CPA on my loan from my business was, in fact, that we did have to go back and calculate the FTE, even though our original application did not ask for that information. So looking at it at 40 hours a week per employee to come up with that full-time equivalent or FTE is important. So definitely check with the CPA to make sure that you're calculating it correctly. Although there was some good news yesterday in that there now is a safe harbor for people who got loans less than $2 million. And they're just going to be making the assumption that everybody needs the money for the appropriate uses, which is great because there was a lot of concern, I think, about sort of the liability and the both criminal and civil liability that came up about the loan about 2 weeks ago. So it seems like the government heard us and actually has made some adjustments, which is good news. Another question from Joanne. I don't believe it is the gross pay that is forgiven. Social Security and Medicare shouldn't be included in the calculation. Is that correct? Is it the gross
so it is,
pay? Go ahead.
It is gross pay. Yes, it is gross pay.
It is gross pay. Okay. So just for clarification, it is gross pay. And, you know, one of the things I know I would recommend to people is to actually read the FAQs. We did put those up on the chamber website, and to go through those just to understand, because one of the things I think that both Heather and I have talked about is the fact that the rules are changing and they keep adding new things every day. So it is important that you're staying up on it and just making sure, and we are posting the rules as they come out, but I do think it's important and a good idea for everyone to be able to look at those and make sure that they are tracking on it, because it has changed pretty substantially from when the first we were applying for the loans in early April, and now when they've actually gone into people's bank accounts. So very true, right, Heather?
Yes.
So are there other questions that people have? We would love to take those right now if people have any. Okay, I think that we are in good shape. I don't think I missed any. Oh, nope, got lost more. Sorry. Can you pay your business insurance with the loan?
That's the same question that was before. And so I'm gonna have to look into insurance. My gut is saying yes, but I wanna make sure that I'm saying the right thing.
Okay, because there's lots of different types of business insurance too, which is another thing to take into consideration.
Yeah.
And then here's a question. Can you pay more per hour in the hospitality business to make up for tips that they made in the past? So for example, I guess if somebody was waiting tables and made tips as part of their income, but now maybe you're doing curbside pickup, or you're doing delivery where they wouldn't maybe get tips, can you pay them more and per hour and then get forgiveness for that, would be, I guess, the question. I'm assuming that's the question based on hospitality piece.
Yeah, that's a great question. I guess my question for you would be if your tips were being reported. So I think as long as the tips were being reported on the paychecks, that would be true, because you would be keeping in line with how much you paid out previously from those couple of timeframes that I outlined. But if not, then I think you might put yourself in a bind there and find yourself with the over and above salary not being forgiven. And I just wouldn't want you to be put in that position.
Great. Next question. Are payroll costs during the 8-week period for a new hire in a new position forgivable?
So this is a question that I've been getting a lot about whether it has to be the same people or the same job descriptions or the specifics about the people or the jobs, that functions that they're doing. And it doesn't really work that way. It's more just your overall FTE. So if you say had one person that was your marketing person and then you laid them off and you decided, I don't need a marketing person right now, I need an IT person because I'm on Zoom calls all day long. Well, as long as it's the same number of hours, that it's fine. Now, if the rate is different, the rate of pay, you might come into a problem there because you could not exceed what your old marketing person was being paid.
Okay. And so that's a great question there.
Sorry,
are balances on credit card forgivable for 8 weeks, or only the interest carried on the unpaid balances?
Great.
It's only the interest. It's not.
Amanda looks nice.
1 second here. We got
Yeah.
a little bit of noise here. Gotcha. All right, go ahead, Heather. Sorry, the question was, are balances on credit cards forgivable during the 8 weeks, or only the interest carried forward on unpaid balances?
Okay, so there's kind of two components to this question that I want to address. So first off, in terms of the 25%, like rent and utilities and interest on your credit cards, that is only interest in terms of that bucket of money there. Now, let's say you put, gosh, I guess you couldn't really put payroll costs on there, but let's say you put your utility bill on your credit card, then that portion would be forgivable, but not just any balance that you have from anything. It would have to be specific to one of your costs.
Okay, that makes sense.
Mhm.
Next question, and this person says, I apologize if this has been covered, but if employees were laid off and do not want to be hired back, may we hire different people to work during part of the 8-week period? And I think we just answered that to say yes.
Absolutely. Absolutely. Hire away.
The goal here is to take some of the pressure off of the unemployment system.
Yeah. We want.
Next question. And next question, if you return the 25% of the loan, does this mean you are not complying with the requirement of 75% going towards payroll? Because paying back the loan is a non-payroll use of the funds. So if you return 25% of the loan, does this mean you're not complying with the requirement of 75% going towards payroll? Because paying back the loan is non-payroll use of the funds.
No, that it doesn't quite work that way. So I think if you're saying paying back 25%, like say today, because there's some conversation about people paying back loans, like let's say you were a business that got over $2 million and you have a whole bunch of cash reserves. This is kind of applicable to the situation with like, what is it? Shake Shack. Yeah. And what was it? Ruth's. Anyway, there's a steakhouse. They found out that they had a lot of liquidity in other places. So they had a lot of money in cash reserves. And they were like, wait a minute, you're not going to have any problem paying your payroll. Then those people are being asked to pay it back as of today, right? Now, if you're just saying at the end of the 8-week period, you haven't spent 25% of it and you're going to pay it back at that point, no, that's not going to go into your calculation at all. I guess this might be a little bit more of an individual situation that you may want to run by an accountant again, but you may have to kind of drill down into what is your reasoning for paying back that 25%. I hope that makes sense.
And you can actually hold on to the money that you don't use that isn't forgivable, and you can repay that.
Right.
At the end of the time period, at the end of the 8 weeks, you don't have to use it. You don't have to keep it as a 1% loan, if that was the question that you were asking. So next question, for self-employed, are contributions to an SE 401k considered as part of your loan forgiveness cost? So if you're self-employed, are contributions to a 401k considered as part of your loan forgiveness cost?
I don't think so. I know that I read specifically about health insurance and they were saying no, which I was kind of surprised by. And so I'm going to err on the side of caution, but that would be something, I can't give you 100% yes or no on that, I guess.
So maybe something to check with the CPA on or your accountant on.
Exactly.
Got it. Also something to look at, maybe the FAQs for.
Yeah.
The next question is, for a self-employed partnership, for a self-employed partnership, we use numbers from our Schedule K as a sole proprietor. Would we use the Schedule C? Do you know about that? Or is that a question for your accountant?
Yeah, I think that's a question for your accountant. I can't speak as ins and outs of taxes, is not quite my forte. So it's just whatever the applicable schedule is that documents your payroll as a partnership. And I guess I just don't know those schedules well enough to tell you.
Great. Hey, and we have a guest online, Deborah Diamond. I think a lot of people know Deborah. She's amazing. And she has a nice reminder here that I want to share with everybody. Be sure to remind your PPP paid employees that they need to report their gross income in their weekly unemployment claim. They will not be eligible for the state benefit or the $600 federal boost for those weeks. So once the PPP is done, they will file a weekly report with 0 earnings and their benefits will immediately restart. So I think that's a great, great point that Deborah's making there. So, again, just so everybody knows, to be sure to remind your PPP paid employees that they need to report their gross income and their weekly unemployment claim. They will not be eligible for the state benefit or the $600 boost for unemployment. Once the PPP is done, they will be able to file a weekly report with zero earnings, and their benefits will immediately restart. And just in case anybody has a lot of questions about unemployment as it relates to this, Deborah Diamond is one of our Ask the Experts, and also is working with us and Vashon Be Prepared to really help support and answer questions one-on-one. So if you go to VashonChamber.com, you can get Deborah's information there and connect with her directly to answer some of the really tricky questions, or just make sure you understand what you're doing with unemployment. So Deborah, thank you. I'm so glad you're on. Another question for you, Heather. It is gross pay, but not employer contributions for Social Security and Medicare, correct?
That is correct.
That is correct. Just want to redo that one. And we got a question from Laura here. I have employees, and then I take an income as an owner's draw. Should I also use that self-employed Schedule C formula for my income portion?
Yes, absolutely.
Okay, that's great. Thank you, Heather. And then the next, another question up. This is a very popular webinar this morning. I'm very happy that people have a lot of questions, and it's good that we're asking these questions so we can get this right. So we have another question here. What if you increase your FTEs? How does that work?
Right. So it's very clear that this is not money that is designed to help you grow your business. I mean, that's great. This whole situation, maybe it has been an opportunity for growth for you. But any of that money or the FTE that's over and above what you had in one of those two timeframes is not going to be forgivable. So you'll just have to kind of think that through, whether you can afford to do that.
Yeah, look at your cash flow.
Yeah.
Next one up from Elizabeth. Can you pay out the payroll due to each employee in one lump sum?
I guess I would ask why exactly. So essentially, you are going to want to document hours actually worked. I guess you may have salary employees, but that's assuming that they're working, they're full-time for a set benefit. I guess I maybe would need to know more about the situation and why. So I would check with your accountant just to be sure if you have a particular reason to do a lump sum just once in that 8-week period.
And just as a side note, if you want to have a side conversation with Heather, Heather is also one of our Ask the Experts and would be happy to have a one-on-one conversation. So you can go to our VashonChamber.com website and get in touch with Heather through there. And she can maybe help you kind of figure that one out a little bit more. I do know that consistency in how you pay your employees is important. You want to have sort of it be as set as what you've done in the sort of period that set what the loan would be. So you want to take that into consideration. Next question. If you don't use all of the 75%, can a portion of the payroll be forgiven on the loan? So I guess that means if you don't use the amount that would have been the 75%. If you don't use all the 75% portion of the payroll, can it be forgiven on the loan? So can you apply it towards, I guess, the loan?
So if you, so let's say you had 2 employees and you had to lay them off and you were not able to rehire your second employee. Okay, so you do need to try to use at least 75% of it. But if your FTE is less than what you had previously, again, you want to use it proportionally to how much FTE you have. So to try to make really simple example, let's say your PPP loan was $100,000. That means you're trying to use $75,000 towards payroll costs. but that used to be 2 full-time employees, right? And so maybe they each get maybe 40,000. You're really just, I think the underlying thing that you want to think about, everyone should think about, is really modeling as much as trying to have it be as similar to that time frame that you're modeling it against as possible. So I hope this is making sense. So let's see. You would be forgiven if you used less than 75%, but you had less employees, as long as you're using that proportionally to how many employees you had.
Yes. But you couldn't apply that to cover the other part of the loan. The part that's forgiven is around payroll, whether
Correct.
it's at the same amount as what 75% is equal to or not. It's about sort of, you're forgiven for the portion that you use for payroll that has been determined by the sort of set period that you use to determine what the loan amount should be. Is that a good way to say it, Heather?
I think that's a great way. Thank you for summarizing.
Yeah, and I know this is so complicated, and I've actually been spending a lot of time myself on this, so I wanted to try to make that clear. So it's really about what you spend on payroll, and you can't apply it to cover the portion that isn't. It's really, you're only forgiven for what you're spending actually on payroll during the 8 weeks. Okay, so next question. Following up on your example of laying off a marketing person and then hiring an IT person, what if the rate of pay for the IT person is significantly different?
So if it's significantly more, that means whatever is over and above what you paid for the marketing is not going to be forgivable. So you just have to look at your cash flow and see if you can afford to pay that, say $20 an hour extra on top of what you paid the marketing. It's only what you used to pay the marketing that will be covered.
Right.
Or forgiven.
And now I would say if you've got a lot of employees, you can kind of work within that sort of dollar amount. But if we're talking about 1 or 2 employees, it's a different, it's more of a one-to-one scenario. But if you're talking about, you have, 5 or 10 employees, you can work a little bit within there. And then I love Deborah. She has popped in and she just wanted to add to the question about the lump sum payment. She said, if you pay in a lump sum, it defeats the purpose of saving unemployment funds. So you really want to just keep paying people the way you were paying people, because it doesn't really work for this to do that in a lump sum. But again, both Deborah and Heather are experts online, and you can contact both of them to get more. And I have a couple questions in chat, so just hang in there 1 minute. All right, one more question here in chat. We want to pay a bonus to our employees. So we want to pay a bonus to employees who kept working on essential jobs. This will be extra dollars for each hour worked. Can this be used in the forgiveness calculations?
Unfortunately, no. Again, it kind of goes into that you want to match what your old situation was as exactly as possible. So if you pay out an extra bonus, that's not really what this is designed to do. It's designed to keep people employed and getting paid their regular paychecks.
Okay, great. And so I have a couple more questions who came in. To clarify, if you follow the 75-25% rule, is only the 75% forgivable?
No, the whole thing is forgivable if you use it correctly. So, as long as at least 75% of the funds are used towards payroll costs and no more than 25% of the funds are used towards rent, utilities, the whole thing can be forgiven. It's not just 75% of the loan would be forgiven.
Okay. Let me keep going down here. Here's another one. Is the FTE percent applied to the average payroll for forgiveness, or the sum of all paychecks? Is the FTE percent applied to the average payroll for forgiveness or sum of all paychecks. Heather, it might be helpful if I go back to that slide and maybe you walk through that again.
Sure.
Okay. I think it is right here.
Yeah, here's my busy slide. So I'm not sure if I'm totally understanding the question, but what they're looking at is not so much like an average, it's just how much time was worked and how many hours were available for people to work. So this slide here is going over the 2 time periods that you're going to want to compare. So let's say the first 2 months of 2020, and you have a 15-hour employee, a 20-hour employee, and a 30-hour employee that worked a total of 599 hours during those 2 months. Okay. What you would do is divide that by the total available hours for them to work during that time frame, and that would tell you how many full-time equivalents you have. So meaning you have 1.74 full-time people. Now, in terms of the rate of pay, you're going to be more looking at what you applied for originally on your PPP, which would have been taken from, you know, your payroll documents for 2019. And there are different timeframes depending on what sort of business you are. So you'd really have to look at the particulars of your PPP. And you just need to maintain the same level of staffing that you had during this time frame. Or you may, if it makes more sense for your business, you may choose the second time frame, which is the February 15th of 2019 through June 30th of 2019. I hope that clarifies.
And then there's another question that has come in about bonuses. If bonuses were paid coincidentally during the baseline period, are they also eligible for forgiveness? And I think, and this, from my own personal experience, the answer is yes, because it's part of your wages.
Right. Yeah,
So
I mean, I
it's
think
part of your wages, so it would be calculated in there.
There you go.
Because bonuses are included in that wage line. And then we have another question about employees that normally earn commission on sales, but they're not receiving that now and are only receiving their base pay. Can I pay an additional amount to them now, even though it's not based on sales numbers? This is sort of like a bonus question that was already asked, but in this case, my current payroll is less than it was before because we aren't paying out commissions.
You know, I don't know about commissions. I'm not familiar with that particular way of paying people. So I don't know, Cheryl, if you know that one from your experience.
And my experience is that it really comes down to what the total wages paid were, and commissions would be included in those total wages. So if you used that, if wages included base pay plus commission, when you did the calculation for what you got for the loan, then that would be okay and forgivable as part of your wages as you were moving into this time period for forgiveness and calculating forgiveness. You know, one thing that has been very helpful for me in particular has been that I've worked with my accountant who has put together sort of a little cheat sheet, if you will, to calculate what's forgivable and then apply the different rules to what's forgivable. And we've been able to kind of put in the numbers and actually walk down to what's forgivable and how much we have to operate within and how many FTE we have. And that is something that I think a lot of accountants have right now, that I would recommend you call and talk to them about it, because a lot of them have these worksheets that they can just plug your numbers in, and then it helps you really calculate what exactly you're working against. And in my case, it turned out that I wasn't going to be able to get to the 75%. I was only going to be able to get to the 60% because of layoffs and some furloughs. So you have to really do those calculations, and your accountant is a perfect person to help you do that. So I hope that answers the question. Got one more that just came in. If we receive the loan on May 1st, can we retroactively pay employees from the date that our business had to close?
No, it's really designed for that 8-week period. Yeah.
Great, great. All right, boy, lots and lots of questions. And thank you so much for all these questions. And I hope that this conversation has been helpful for everybody this morning. And Heather, thank you very much. It's a lot of information. Again, I just want to remind everybody this is complicated. Recommendations would be if you have specific questions about the loan, I would get in touch with Heather. Her information's on vashon-chamber.com. If you have questions about unemployment, Deborah Diamond is an amazing resource to help answer those questions. And if you need access to the FAQs, those are on vashon-chamber.com. And the slides and the recording of this will be available on vashon-chamber.com under chamber chat. So lots of questions, and the good news is we have about 8 weeks to figure out how to do it. One other tip on the PPP loan forgiveness that I got from my accounting team was that you should really start to pull all these things and track this very much separately so that you can ensure that you have all the information and when you go to do the calculation for forgiveness. So start now pulling the things that Heather suggested in this call so that you have those ready to go. Also from a chamber standpoint, and again, partnering with Vashon Be Prepared, we also have reopening roundtable discussions happening. In fact, recreation and fitness is going to be facilitated by Erin Keeper on Friday. And really what we're trying to understand is what are your concerns? What are you planning to do about reopening? And how can we help? And then something else that we are working on is a reopening business workshop and kits. And these would be kits that if you went to the workshop, that you actually get the kit for free. And that's kind of a nice idea if you think about having access to masks in that kit, signage for your business entrance, maybe floor markers, hand sanitizers, and even a pledge poster. One of our goals at the Chamber, along with Vashon Be Prepared, is to make sure that when people come to the island or come to our businesses, that they see consistency in how we are handling reopening and reopening safely, and making sure our customers are comfortable when they come into our businesses or come to our businesses or engage with our businesses. So that's something that you're going to be getting more information about coming up. But if you can join a roundtable, we would love to have your perspectives so that we can make the most out of these kits and make sure our business is moving forward. Businesses are all succeeding in this situation. We also, I've already mentioned it a couple times, we have our Ask the Expert office hours. We've got people for finance. Heather's up there for help with the SBA loans. We have a marketing and website expert, Katie Herman. She will actually offer help on bringing your business online if that's something you need to do. We have Deborah for employment issues. We also have an expert for insurance. We have an expert for business planning and even business transformation, if in fact maybe what you used to do isn't what you want to do going forward. All things that get help you out with. And then we also have our Chamber Virtual Networking Coffee coming up this Friday. And Emily Wigley from Orca Eats is going to be hosting. And these are just great to get together and hear what other people are doing and hear across a bunch of different businesses. And of course, we have our Chamber website resources. Definitely go there, check them out. Lots of new things. And we're updating that. Rachel Waldron, our Chamber webmaster, is updating that, I'd say daily. So thank you for joining us this morning. I really appreciate everybody coming in. I hope that you found it helpful. Be healthy, stay healthy, and let's work on this together so we can all come out of it on top. All right, thank you. And Heather, thank you again. And Deborah, I know you're out there. Thank you as well. Have a good day, everybody. Bye-bye.